They don't want to sell because if they sell, then they're going to be able to potentially move into another home that's half the size at almost twice the cost. So that puts this big barrier here where people stay renters and stay renters for longer. And so it drives this part where although you've seen some drawback in rents, there's still a need for rents and still demand for rents, and it still increases your yearly rents.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kessel. Today, I'm joined by someone I'm looking forward to chatting with, Jason Yarusi, who's the managing partner of Yarusi Holdings, working on multifamily investing across 7 states in the southeastern United States. So excited to have you here today, Jason.
Michelle, excited to be here. Thank you for having me.
Of course. So let's dive in. First off, for those who are not familiar with you and your work yet, can you share what your main focus is these days?
Sure. So we invest in multifamily properties down here in the Southeast, predominantly here in Middle Tennessee. I'm born and raised in New Jersey, moved down to just south of Nashville back in 2020. We have been in multifamily acquisitions back since 2015. Predominantly, we are here in Tennessee, but we also have properties in 6 other states that surround Tennessee. We do property management for about a third of our property that we run out of our office, and then we use third-party management for some of the other larger assets out of state.
Awesome. And what got you initially started in the real estate industry?
So I was living in New York City. I had owned bars and restaurants and a brewery at a time. Ended up moving back to New Jersey, where I was from, right after Hurricane Sandy happened. That storm basically decimated the East Coast, and my father he's retired now, but had a business that was strictly focused on structural raising and moving. So he would take buildings that were compromised for many reasons, storm-related being this reason, and move them or raise them to get them out of the flood zone and to make them compliant for FEMA. So when that storm happened, his business went from a couple calls a month to 1,000 a day overnight. And so my now wife and myself and my little brother, who was working for me in that space, moved out to New Jersey to help Dad really take on all of the new load of work. We did that for a few years before transitioning into, we'll say, something easier, if that's the case. That line of work is very rigorous and very demanding. So we started moving into various forms of real estate, from flipping to wholesaling back in 2012 and 2013, 14, before branching off into multifamily into that 2015, 2016 mark. We just saw the action, the activity, right? The active side of all of the flipping, the wholesaling, everything we were doing with our life was in that active environment. So we were looking for something that we could actively manage without the day-to-day work of actually having to do the grunt work. Came upon multifamily investing, the model made sense. Everything from just the ability to get the cash flow right from the property as it produces, to everything from the natural appreciation if you're in the right market, to the forced appreciation that you can produce based on your strategic improvements to the property, to having the depreciation and tax advantage benefits that can come with the right multifamily assets. So we dove all in, started to learn the space, just understand the space, pick the market, and we
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
while in New Jersey, we decided on Louisville, Kentucky. Brought a 94 unit there, a little over 10 years ago. That was our first large acquisition. That was a nice property, really good stepping stone for us. The business plan worked very well. We were able to improve that asset, and over the course of about 28 months, had a very nice exit for investors. But that was our first linchpin. Then we followed that by buying another 400 units in that market that we followed the same business plan with before exiting on those properties. I think the last one we exited was in 2020, all while we started moving into some other markets.
Yeah, that's awesome. And so, what do you feel have been some of the main keys that made the biggest difference in allowing your business to be able to grow and run successfully?
Hiring has always been a big piece for us. In the beginning, we were doing this very much on our own. So it was my wife and myself who were quote unquote running the business day in and day out, and that was a part where the growth was capped by each of us, right? Because there's a lot of different hats to wear into the space, and at a certain point, you become the one who can accelerate the growth, but also the one who can hold back the growth. So as we started to bring on team that could help us really push forward the projects in a successful manner, that really helped us grow. And so today, I think between the three businesses, we have maybe 20, 24, 25 employees who work for us that have helped us really continue to grow each and every day.
Yeah, amazing. And how did you get to that place of being able to scale on such a big level? Were there certain strategies that were supportive in that implementation?
The scale piece it was just setting up the right business plan or pivoting as we needed to, right? So that first
Mhm.
project, we went in with a certain business plan, right? We were not doing anything that was dramatically a heavy lift, right? I came from a heavy construction world where every project was intensive. So we were looking for things that had some layer of intensity, but most of that was targeted at the interior, not so much on the exterior, let alone being simple things like roofs or changing windows, but nothing to a structural capacity. There were no properties in flood zones, no properties with foundation issues. We were looking for properties that you could change up the exterior based on cosmetics, and then the interior based on layout and new implementation of a certain renovation plan, and then changing the marketing, the landscaping, potentially redoing the parking lot, and then making those upgrades to the team, the marketing. And so we used that plan, we refined that plan, and we still basically use that plan today, right? We buy properties that are not performing based on what we anticipate the market can warrant. Then we look at the different levels that we can bring to push the income while moderating the expenses, while putting in a right team to be able to handle this growth in the property. And we've done that day in and day out across each of the properties.
Yeah, amazing. And so, what type of strategies have been like the most supportive in being able to grow? Like, is there any sort of advice that you could maybe share for those that are earlier on in their investing career?
So you can look at two sides, right? You can look at your income. Now, income, there's a certain part where you have to know your comps, right? You have to know exactly what the comp is. And many times, both from, say, you're flipping to if you are just doing rentals, is that you're using what you want to be the best comp, right? It's the one that's driving the highest rent, but it's not actually a true comp for you, right? So maybe that property has a pool or has amenities or it was a new construction, right?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
And that's truly not going to be a comp, or they have a layout that's not conforming to your layout, right? So maybe the layout for the 2 bedrooms is much better than your layout, which is more of a railroad style. So you have to make sure you're actually using true comps so you can know your rents. But you can also get lost in not adding on the right additional income. So maybe you're missing a facility fee, a pest fee, a trash fee, a water fee, right? Or using those right fees. And that second layer of income can be really beneficial to bolster your bottom line return when all is said and done. And then on the same side is the expenses, looking at your expenses, making sure that the expenses are moderated based on what they should be for the market. And that could be everything that is there, are your utilities out of whack, right? Is there something that we're missing, that you're very heavy on your electric or you're very heavy on your water, where you have to look at what's driving that cost overrun? And then your contracts, right? Your pest contract, your trash contract, your cable contract, if you have those. Are those contracts in line, and are the reoccurring contracts each and every year matching, or are you taking on some obsessive or cost increase from one year to the next that you need to go back and negotiate? Because if you look at that both sides, then you're pushing your income up while moderating your expenses.
Yeah, absolutely. That's important for people to note as they want to grow and expand. And so, what are you most focused on solving or scaling to next?
So, we're constantly solving for a return, right? So we're looking for yield. And when we look at the properties we're bringing on, we're looking for anywhere between 35 to 45% coming from the cash flow of the property. That's the built-in year-on-year cash flow, with the 50 to 60% being fourth depreciation or profit at the end when we sell that. So we look for projects that meet those dynamics and make sure our business plan aligns. It's a market we believe in, that our stressors, right, both from a risk analysis, can be met on both sides, and that we don't have anything that could warrant some black swan, or at least that we feel on in the market we're into.
Yeah, absolutely. And I know you mentioned when we chatted a little bit before the call that you're focusing a lot on workforce housing. Can you expand into that?
So our layer of housing is typically built somewhere between the 1980s to 2010s, right? Where you have the affordability crisis here, where for the 16 million homes we're going to have about 11 million built this decade. And so that leaves us at a delta here where there's also a supply constraint, right? So in some markets, there's more supply and demand, but in most markets, there's more demand than supply. Now, this goes in pluses and minuses, right? And when basically when all the money came out with COVID and then interest rates dropped, you had a lot of building, right? So you saw a year or two where you actually had more supply than demand, but now that's retreated, and we still need now housing. The other side of that is that people who do want to go out and buy a house, they've gone from rates in the 3 and 4% into the 6, 7, and 8%. So they can't afford a house, and they especially can't afford the house that they want to buy. And couple that with the people who did refinance at that time when interest rates were low, they don't want to sell, because if they sell, then they're going to be able to potentially move into another home that's half the size at almost twice the cost. So that puts this big barrier here where people stay renters and stay renters for longer. And so it drives this part where, although you've seen some drawback in rents, there's still a need for rents and still demand for rents, and it still increases your yearly rent. So we're constantly focused on housing that meets the everyday person, everybody who's working in the factory, who's, a school teacher, who is working in medical, right? That's our everyday employer who is going to be someone who will rent at our apartments. And usually from a point of turnover, you might see on the better part, 45 or 50% of units turnover in a year. But because of this constraint, we've actually seen that dip pretty much dramatically down to about 35 to 40% turnover year on year.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah, absolutely. And how, as an investor, do you kind of see a solution for these types of situations?
So, the solution, of course, is to build more housing, but then we need to have the places that we need more housing to allow it to be built in a timely manner, right? Because most of the time, the cities and the urban areas where we need more housing is the hardest and most restrictive for us to build. So when that happens here, then they're forced with going through a number of different layers to be able to build the housing. It becomes more expensive, which of course, it makes this more costly for someone to buy this in the back end. So at this point, it helps me on the multifamily level, although we can't get the housing out of the ground because it helps us with our renter pool. But it's just to have a streamlined permitting process with a predicated idea of what we need into the markets in terms of their urban development. That would be the solution forward. But that's each and every market because there's not an overall government infrastructure across the U.S. that puts this in place. So, the areas like L.A., or Chicago or Miami, right, where you need this housing is some of the most difficult to get the housing out of the ground.
Yeah, absolutely. And how is this creating new opportunities in the markets that you are currently serving?
It keeps the renter pool strong, right? So it keeps us to a point where we know we have a supply for our units, right? Because ideally we're competing against new construction that when it does get built, if and when it gets built, it's going to be more costly, right? So they have to offer higher, more aggressive rent levels, which only a certain number of people can get approved for. So we're meeting that mid-tier investor here where we're able to offer an in-place asset, right? We're buying this at a discount to what the replacement cost would be. So we're all able to offer more affordable rent levels, which can keep our properties, full, but also a high supply of new renters that come down the line when we do have opportunity for rentals.
Yeah, absolutely. And what do you kind of forecast for where the market is heading to?
There's want and need, right? I would hope that we continue to get some rent relief, or some rate relief. We've seen some. We anticipate more this year, but then on the other side of it, the treasuries aren't always aligned to what happens with the Fed and with things like the war in Iran and other parts right now. You're seeing treasuries bump up again. So ideally, we want to be in an environment where we won't have stagflation and we won't have this point where there's different levels pushing the Fed away from reducing rates. Because that, again, is one of the few levers that can be very impactful on all forms of real estate, but multifamily real estate, right? Because price and rate are an inverse relationship.
Yeah, absolutely. What is one of the biggest challenges that you've overcome on your investing career that now you can see the bigger picture lesson in hindsight?
You have two parts, right? So you have the project, but then you have the financing. The financing is both in debt and equity. We made good decisions not to take on any bridge debt or floating debt over the term, right? So that's good, but it's always um, forecasting, right? Nobody would have predicted that would have, double-digit rate increases over a short span of time. And so when that happens, it creates a whole different environment out there, right? And so it changes up, your business plan, your focus, your timeline, right? Your execution. So you just have to understand that you have your worst case, your best case, and your moderate case, right? Or your base case, and that you do need to perform and operate at all levels. Also, you have to look at different varying timelines, right? We did not and usually do not underwrite to a refinance where we have to have some inherent value created to be able to accomplish the mission, which has been good. But ideally, looking at that, I saw a lot of people with trouble because they banked on short-term floating rates to be able to refinance, and then rates exploded on them, and it changed up their whole business plan.
Yeah, absolutely. There's always those things that happen for bigger pivots. And so, what is kind of your strategy for lead generation and finding the best properties for investing?
So the brokers are always your best case, creating relationships with brokers. They are doing the groundwork each and every day. So that, of course, having brokers that know you, that you've performed with in the past, or that you create a relationship with, so they can understand exactly what you're looking for. First and foremost, the best case. Beyond that, if you're in a market and you can operate in that market and you like that market, you can do everything from select mailing to just even, going and door knocking, as random as it seems. But some of those smaller multifamily are managed by the owner themselves.
Yeah, absolutely. Well, thank you for sharing all that. That is super helpful. And before we begin to wrap up here, if someone wants to reach out, connect, learn more about everything that you're up to, where can people find you and connect and reach you?
Sure. Well, Michelle, thank you for having me. You can find more about my company at yarusiholdings.com. That's YARUSI holdings.com, or email me at jason@yarusiholdings.com.
Perfect. Well, I really appreciate your time, your story, and your perspective. Thank you so much for being here.
Thank you for having me.
Of course. And for those that are tuning into the show, if you got value, make sure you've subscribed. We've got more conversations with operators like Jason who are building real businesses. And we will see you all on our next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.